Hello, everyone, and welcome back to the Future in Review podcast. I'm Berit Anderson, the COO of Future in Review and host of this podcast. And for those of you who have never heard of Future in Review before, we run the annual FIRE conference, which The Economist has called the best technology conference in the world. And the other arm of our business, which we'll be talking a little bit about today, is Strategic News Service, which provides its subscribers with the most accurate source of information about the future of technology and the global economy. So if you enjoy these video podcast updates, you can sign up for a free trial of the Strategic News Service Global Report at stratnews.com. That's STRATNEWS.com. And we're going to be doing things a little bit differently today. I'm here with Evan Anderson, who you may have guessed we are related. He is my brother. But he's also the CEO of Invent IP, which is an initiative we run that fights nation-sponsored intellectual property theft, an analyst with the Strategic News Service Global Report, and wears many hats at Future in Review as a company. He can do pretty much anything you want to. But he is going to be interviewing me for a change about my global report from this week. So, hello, Evan. Welcome.
Thank you. I'm excited to be here. So I think we should just jump right in. This week you wrote about what you called the world's most powerful technology company. And I think when people think about that, various names might pop into their head, but it probably isn't the company that you were talking about. Do you want to explain why and who it is?
Yeah, I mean, I think oftentimes when people consider what makes a company powerful, and especially this is true of many publications, like traditional lists of the top 10 companies or the top 10 tech companies usually are topped with companies like Apple, Amazon, Alphabet, Meta, Tesla is up there. Yeah, and all of those things are usually based on kind of a range of factors. One of them is market capitalization. Another, often is revenue or profits, or, kind of assets, total assets in the bank. But the thing that, as I was writing this week's report, the thing that I realized is that there's another company out there that actually has a significantly more leverage over the global economy, over other companies, and over the market in general. And that company is BlackRock, which is traditionally considered an asset management firm. But my personal belief is that would be a miscategorization of BlackRock's real potential and kind of who they really are as a company.
So maybe you can talk a little bit about why, right? So what makes them more of a tech firm these days than you would traditionally think as, an asset manager or financial firm?
Well, so first of all, it's important to keep in mind that BlackRock has the largest volume of assets under management of any firm in the world. So they have the most amount of money that they are investing at any given time on behalf of others. And as they have built that up over time, the key to their success has been this proprietary AI-based system called Aladdin. And Aladdin is something that they built early on in the company's growth to help them provide themselves with predictive analytics about the implications of specific trades or investments, and to understand how changing market conditions might affect specific investments. Over the years, they have invested in Aladdin and really expanded that business to the point that it is now its own business unit. It's being used by about 200 plus other investment banks, investors, insurance companies around the world, governments. And for that reason, not only do they have this huge pot of money, $8.49 trillion under their own management, they also have a significant amount of outsized capital that dwarfs that number, actually, I believe. They haven't made it public, but from everything that I've been trying to figure out about, who their clients are and what the potential total capacity of capital that's being influenced by the Aladdin platform is, it's got to be upwards of like $30 trillion.
Which that would be a significant proportion, I think, of global wealth that's being invested, right?
Yeah.
So you're saying it's not entirely, I mean, it makes sense, right? So it's an AI platform, they designed it for themselves, and it's supposed to help them predict markets and predict consequences of various contingencies in markets, which I think these days people probably, if they're tracking what's going on in the world in terms of AI development and tech, they're probably assuming that a lot of Wall Street firms might have something like this, right? That's a tool that
and
helps
that's
them.
And BlackRock, as far as I can tell, is really kind of the cutting edge of that.
So it's like the best in class. Okay. And you're saying that you've been doing some digging and some research on some of the companies that may, or entities, like it sounded like sovereign wealth funds maybe, or something, that may be using this. Can you name some of them?
Yeah, so a few that they've been public with, Microsoft Treasury, which manages, I think I don't want to misstate this number, so I should look it up, but I believe, yeah, here we go. So they manage $120 billion. So that's one client. NN Investment Partners, which is based in the Netherlands, they manage 300 billion in euros, 300 billion euros. And then Citigroup actually uses it for their for a specific part of their business, which is their custody and fund services. And their custody and fund services business alone oversees more than $21.5 trillion in assets. So that's just 3 customers. We know that they have about 200, generally speaking. And I'm gonna wager a bet that if 3 customers together is a potential total of, probably not all of that money is being influenced or assessed or invested using Aladdin as a platform. But I think it's pretty safe to assume that the total volume of assets under management from their third-party clients is significantly higher, probably even than that $30 trillion number.
Yeah, so they have, hundreds of these clients, right? I mean, and it makes sense with 100 billion here, 100 billion there, but when you get up into the trillions, some of the biggest financial groups in the world are using this. That's pretty impressive. So I think probably the next question in anyone's mind would be, okay, so this is huge. It's quiet, right? It's not often talked about, but it's huge and it has a massive influence in the financial world. What do you think the implications are, right? What are the ripple effects of this? Like, is this driving the movement of global liquidity in a significant way?
Well, so it's very difficult to say for sure how much it is driving the world of global liquidity in a significant way, because the markets are very opaque in that sense. However, one can definitely say that BlackRock itself has invested heavily in the capabilities of Aladdin. They have acquired and created strategic partnerships with about 10 different companies that I've seen in the last 3 or 4 years, starting in 2019, that have allowed them to provide access for investors into, like basically merge visibility into public and private investments, right? So throughout the stage of a company's growth, you can kind of measure and kind of assess your investments over that time. They've made investments in their ability to provide back-end systems for investment firms. So essentially, you can manage your entire investment office using this platform. And they've also, they created a new partnership in August with Coinbase, which allowed them to accept or allowed users to invest using only Bitcoin. So that's the only one they have so far. But even that partnership caused a significant spike, of course, in Bitcoin's stock value. So it's safe to say that they're probably having a significant impact on company stock prices and stock prices across the board.
Yeah, or just like you're saying, like the price of a cryptocurrency, right? I mean, that's a big difference for that kind of market when it's not young, but it's still a new concept. And so if somebody big comes in, then that can cause very large price fluctuations in a
Yeah.
volatile asset. Um,
The other aspect of what, like, why does this matter?
yeah.
Is Aladdin has reached the point where it has acquired what are called network effects. I think many people who watch this podcast are probably familiar with this, but essentially they are big enough and they have enough partners and enough capital on the platform that they're like at this stage where they're about to become or have become Google, but for money, right? So if
Yeah.
you think about other platforms, the whole idea behind network effects is that the bigger a platform or a network grows, the harder it is to disrupt it, and the more successful it's liable to become, and the more it accelerates the growth of their members, users, in this case, clients. For Aladdin, a big part of what's really important about this is every time they get a new client, that's an increase in their data and visibility into other companies, right? And so I'm not saying that they're surveilling their clients' data. I'm sure they're not. It would be a very poor business decision, although poor business decisions have been known to be made in large American companies. But I do, but they are, so they have a new partnership with a data portability company, Snowflake, which allows them to any of their users to integrate their own proprietary data sets into Aladdin's historic risk management analysis tools. They've also launched a new climate center that is acquiring and partnering with companies left and right to create a predictive risk analysis so that investment managers, insurers can tell how specific companies, specific geographies may be affected in the future by climate change, right? You could compare one oil and gas company with another to say which of these companies is more resilient to the future effects of climate change. So all of these things, and that like future looking aspect is really unique in the industry. So right now there are capabilities you can see, okay, who is currently most at risk, but there's really no other platform that I know of where you can see into the future, which is a part of why I think it's interesting to us at Future Interview.
Yeah, and I mean the implications of that are huge, right? If you're managing trillions in wealth and people actually pay attention to what your solution system is presenting to them, and they're all asking questions like, should I be invested in Florida real estate, for instance?
Right.
Big moves could happen, right? Based on what the answer to that question is for all these different clients.
The other side of this is that if you are an investment manager of any kind, if you are, running a hedge fund or running a mutual fund or an insurance company, and the level and the volume of data combined with the influence of the total assets under management and total assets under management of their clients that BlackRock has acquired is such that if you don't become a client of BlackRock, you are going to be at
a significant disadvantage.
Yeah, like you can't afford that, right?
Yeah.
So it's really interesting because they have through this series of very strategic and really smart partnerships and acquisitions over the last couple of years, gotten themselves to the point where now, if I was in that space, which I'm not, but if I was, like, first thing I would spend my money on.
Yeah, it's a bit like they're designing the next Bloomberg terminal, but this time it's for predictive analytics about market moves, right?
And when you know they also have that much capital under management, you can also assume that like a certain amount of that capital will be reacting to those risk predictions or those scenarios. And therefore, I mean, you could choose to bet against that. You could choose, you can kind of start to, like, once you start to see some of the potential for how this monolith, this very large influencer in the media space or in the money space is behaving, then there are all kinds of intellectual games that I feel like investors are probably already playing.
Yeah, I think the short Aladdin portfolio might be a scary boat to ride. All right. Well, thank you very much. I think that sounds like a lot to think about, right? As we move this comes up a lot, I think, in different fields, but as we move into an increasingly, machine learning driven era, where this is kind of common in a lot of different fields, it just keeps coming up on the radar over and over again. And it is not surprising at all that, the folks on Wall Street would be kind of coming up with some of the top solutions for how to do predictive stuff using existing very large data sets, right? That they would have the data, that they would have the money to spend on developing the tech. So fascinating stuff, I think,
I will add one thing, which is
Go
I
ahead.
feel like this conversation has made BlackRock sound really terrifying. And previously I've written about the fact that they really are a leader in advocating for sustainable and sustainability and ESG considerations in investment. And I think it's important for our audience to recognize that, right? Part of the reason that I became so interested in this company is because they really are kind of leading the charge on doing the right thing through investing. So
are you saying that because they often get mistaken for Blackstone?
No, I've also written about Blackstone, as you know, which has bought up a huge volume of rental properties in the U.S. And single-handedly shifted the market, the real estate market. But they are not the same company. It's important to note. Two different companies. Blackstone and BlackRock are very different. And I think it, in any kind of like tech media industry business, so much of the media is around tearing these companies down. And I think it's important for people to know that from what I've seen so far, I would consider BlackRock to be actually a pretty, upstanding citizen.
Corporate citizen, yeah.
When it comes to corporate responsibility.
It sounds like part of the point that you're trying to make too is that technology being agnostic, which perhaps people will disagree with this, but that's my stance. You design technology to do certain things, and it's the things that you're trying to do that may have a moral or ethical place in the spectrum. But the technology itself is not necessarily good or bad in any random circumstance when it's under development. The point is, what are you going to do with it, right?
Yeah, the problem is always the errors in judgment that result from not foreseeing the consequences.
Right. And so that probably one of the major implications of this is if a lot of global liquidity is already, focused on using this tool to get answers and then to make choices based on those answers, then if the tool is good, that's good, right? And if it's telling you, hey, you really shouldn't make this investment because this climate change effect is very likely to completely nullify any profit that you would make on this investment, and it's actually pushing people towards smarter investments or greener investments, but in a way that is both efficient and accurate, that could be a really great thing. And if there's a problem with the tool, then you'd have an issue. So like this tool could be very good for efficiency and various different things that we do need in the capital markets to prevent more ridiculous volatility and more poor decision making. But it has to be the right tool, right? In that case,
right.
And it sounds like you think that maybe this is the right tool.
Well, I mean, I don't think I am not of the opinion that any tool is the right tool, or any tool. I think Mark Zuckerberg thought that Facebook was the right tool for building social connection, even though he was kind of a dick about the way he started it, which is as a appraisal for whether someone was hot or not in college.
I think he might have thought it was the right tool for generating profit from ads.
Maybe. I don't think they started out that way though. And I guess my point is that I do believe BlackRock has been a good corporate citizen. I believe they've been instrumental in driving more investment in sustainable solutions, and no technology developer that I have seen so far has been able to avoid making mistakes that can have very large and deleterious effects on society. So I would just say good intention,
judgment.
Great start.
Yeah.
Lots of opportunity for widespread economic issues down the line that I'm sure they're thinking about and talking about internally. But
All right. Well, on that happy note, I think we've run out of time. So I'll draw us to a close and just say again, if you enjoyed this podcast, if you enjoy thinking about these kinds of things or hearing about them, please do join us. You can sign up for a free trial on stratnews.com. That's stratnews.com. And thank you very, very much for your time today. And I look forward to doing more soon.
Thanks, Eb.